welcome to the Interaccess channel and Interaccess.io. We are continuing to step through this idea of a mortgage and how Web3 tools, whether it's Web3, crypto, DeFi, can make the mortgage process better, more efficient, can just significantly change it. And again, we went with a mortgage because it's something that a lot of people know about, and it's something that's really inherent to especially in the US, but other countries. And ironically, it was the mortgage crisis, kind of the mortgage meltdown, that led to the creation of Bitcoin, which kind of brought us all crypto and DeFi anyway. So in this instance, in this video, we're going to talk about the idea of the ownership, the title and the deed and such of the home. So we're going to assume that the bank decided to give me the loan of $400,000 for a $500,000 home. Okay, so this is the value. This is the loan amount. And of course, I'm going to have to make interest payments and everything else on the loan. So they've decided to do that to me. Now, we ourselves, my family, and the sellers of the home are going to go to a title insurance company, and that title insurance company, remember, is basically going to ensure that the people that I'm buying the home from actually owned it free and clear. And I don't mean free and clear from the bank, I mean their title was clear, meaning the people that they bought it from actually owned it and there are no other claims on it. And what they're trying to do, remember, is the title insurance goes back and checks and says, is there anyone in the past that has any sort of claim on this property for any reason? And the title insurance company usually asserts no, they don't, and therefore they are willing to have the seller sell it to me, except that they make me purchase insurance, and that insurance could be anywhere from $1,000 to $2,000 to $3,000, depending on the value of the home. And that insurance basically says that if the title insurance company was wrong and didn't completely do their homework, and someone comes out and says, look, 5 generations ago this land was given to my family and it was stolen, or if it was sold illegally or something, and therefore I have a claim on the land, the title insurance company says, if that is true, then Adam, you and your family are going to get enough money to basically pay back the loan and for the value of the home, because someone else actually has a claim on it. That's what the title insurance company does. That's what title insurance is. So let's talk about that and the idea of a deed, because also the transfer of ownership is going to be made at the county level, right, where we are going to have a deed at our county, and I currently live in Harris County in Texas. So in Harris County, it keeps track of the fact that I am now going, my family and I, my wife and I, are now going to own this home. Okay, so let's say, for instance, and this is what I believe will happen eventually, and this is where I think we're going. Let's talk about what that means to have ownership. Now, we know from talking about crypto and DeFi that something that we have called a non-fungible token represents some ownership of some sort of asset on chain, right? And NFTs thus far have been, have mostly been about art and collectibles, right? They've mostly been about digital works of art. They've been about some collectible works of art, I guess you could say that, some collectibles like NBA Top Shots and those kinds of collectibles, and then we're starting to delve into NFTs representing other, valuable assets that are collectibles. But an NFT is just a token that represents the ownership in some sort of asset. So the question is this: why should not a non-fungible token represent my ownership in a home? Okay, so why shouldn't I have a token in my wallet? So this NFT can exist on a blockchain, regardless of which chain it is. Okay, this NFT can exist, and this NFT points to this particular home right here. Okay, and it says this token represents the ownership of this house, and the fact that it is now in my wallet. So this is Adam's wallet. So remember, the NFT exists on the blockchain. My wallet now controls. The blockchain says Adam's wallet now controls this non-fungible token. Adam has control over this token, and which is currently worth $500,000, this particular home on this address, and gives all the information about that home. Now, this doesn't mean that I'm going to go on OpenSea and trade my home anytime I want. It doesn't mean that I'm going to borrow against it to go buy something speculative. Most people don't do that for their homes anyway. Plus, this particular NFT, this code right here, there can be a standard for, say, NFT, for homes that say, look, this is not easily transferable. You have to go through some sort of process for this to be transferred. If this gets stolen out of my wallet, if my wallet gets hacked or something, there is a way for this NFT to make it back into my wallet. There are some verification techniques for this NFT to move from one wallet to another, or for the control of this NFT to go from one wallet to another. So it's not like you've seen where there are hacks and exploits and people have their Bored Apes or their CryptoPunks stolen from their wallet. You can put certain wrappers in there. You can write the code in such a way where I can't just go sell it to my buddy for $20 or something, or we can't just have homes changing hands by the month or something like that. You can write certain code in there such that I can't go transfer. In addition, there can be certain code in there that says this NFT is controlled by my wallet and the bank's wallet, because I have a mortgage, right? And so it says I can't go sell that NFT without the permission of the bank. So it's held by my wallet and the bank's wallet, maybe simultaneously, maybe there's a multi-sig, something like that. But it shows that my wallet controls it and the bank's wallet controls it. You can write all that code in there. But what is the benefit of it being a non-fungible token is the transparency. Now we can track a home moving from one wallet to another, which tracks ownership, which tracks provenance of that home. Now, assuming that at some point some title insurance company says, yes, Adam, the people that sell the house to Adam and his wife owned the home, that can be kind of that starting point, that first oracle that says the title insurance company has insured up to this point in time, going all the way back to the history of that property. We've insured up to this point, and from here it moves on chain. So everything from here forward is on chain. From here back is maybe title insurance company, and this is maybe where title insurance companies can make some money by saying, look, we're going to insure all this. The title insurance company maybe creates the non-fungible token and says, if there's any sort of claim from here back, we will take care of it. We will have an insurance pool, and maybe, again, this could be decentralized insurance. We will have an insurance pool that takes care of that. But also, since we have guaranteed everything back here, maybe we get a little piece every time this NFT transfers. Maybe that's how title insurance goes forward. Maybe that's how title companies go forward, as they say, look, we've done our homework up to this point. From here on out, it's going to go on chain. Now, part of this also revolves around the idea that, remember, the deed is kept at the county level. So right now, if we want to be technical, the county database is actually a blockchain, right? And my deed, the deed that represents this house, is actually an NFT, is it not? This is the database. This is essentially like the blockchain. The deed is the NFT. So what we're doing now isn't all that different. We're going to the county and we're saying, change who has the ownership, but the deed is still recorded at the county level. We still have to go to the county to make the transfer. It's not a whole lot different from what we're doing now to have an NFT represented. So you're going to have counties, you're going to have the government be a part of this and say, we're okay with having things recorded on a public blockchain such that we've helped create this NFT standard so that we can verify this. What it does for governments, for government entities like counties, is say, look, they probably spend a tremendous amount of money on databases, on management, on people to manage all this, and they don't maybe have to spend all that money anymore. They can devote those funds elsewhere because we're going to use a public blockchain that is not owned by anyone in particular to actually keep track of this. And remember, we can keep all this data tremendously safe. We can back it up. We can write the standard of these non-fungible tokens that represent owners of the assets in such a way where if wallets get hacked or stolen or something and the NFT moves, then you just go, all right, Adam didn't really sell that NFT to someone in another country. What actually happened was he got hacked, and therefore we're going to be able to recreate this and make it to where nothing's changed. So it doesn't have to exist exactly like you see NFTs right now with people getting hacked and exploited on OpenSea and other platforms like that, or people getting their wallets hacked accidentally, and all of a sudden I no longer can live in my home. We can write code to get around that. We can write code to secure for that. Okay, but this is what we could see right now is the NFT could represent my home. Now, the cool part about this is if my home is now represented by a non-fungible token, which tracks the provenance, which tracks the ownership, which tracks more importantly the control, and it's it's myself and the bank. Our wallets actually kind of control it. Now, the really interesting part is what if I could attach other things to it, right? So what if there's a way on here that I can attach warranties for appliances that I put in? Or I could attach, when I have work done, so I put in a new fence in my home, and I can put the information about the fence and who put it in. And that is all going to go to the video we talked about before, which is the appraisal of the home. When they go do the appraisal, they can look and say, this home has new appliances with warranties. This home had a new fence put in. This home had a new roof put on at a certain point. And we can actually use this NFT of the home to transfer warranties. We can use it to transfer information about what was fixed and when. And that will be tremendously more efficient, because right now, when I buy a home, it's oftentimes that the home seller gives me a big book of all the warranties and all the things they've had done to the house and who to contact, and I need to go contact those companies and make sure that the warranty moves forward with the appliance or with the work that was done. And I need to go make that transfer. It seems like it should happen via NFT. And look, every one of these can be its own NFT that you can attach to this one. Again, that's where you need to create standards. You need to work with the county. You need to work with banks and lenders to create some of these standards around what this non-fungible token looks like. But that's a little bit about how, most importantly, non-fungible tokens or NFTs, Web3, can play into this whole concept of what we generally refer to as the mortgage, a loan to be able to get a home. Hope you enjoyed this video. Hope you'll subscribe. Hope you look forward to the next one.